Hello, this is Jason Gentile of Apella Capital. Welcome to our fourth quarter 2017 market review. Today we'll be discussing recent market events as well as the performance of various asset classes, geographic regions of the world, and factor exposures that are targeted in our investment portfolios. First, let's take a look at a few highlights from this quarter. 2017 was another strong year for equities as economies around the world remained in synchronized global expansion. Despite some geopolitical tensions, volatility remained near historic lows, and markets around the world continue to steadily rise. For the third time this year, the Federal Reserve announced at its December meeting that it'll be raising interest rates to a range of 1.25 to 1.5%. The rate hike was prompted by lower unemployment, increased spending, and bigger investment by businesses. Although rates are rising, the jury is still out on the mysteriously low inflation rate, which fell short of the Fed's goal of 2%. In further Fed news, Chairwoman Janet Yellen's four-year term came to a close in February. New Fed Chairman Jerome Powell, who was appointed by President Trump, took office on February 5th. The House and the Senate finalized and passed the tax bill, which was signed into law by President Trump on Friday, December 22nd. Some of the key takeaways from the bill include lowering the corporate tax rate from 35% to 21% starting in 2018, lowering the top individual tax rate from 39.6% to 37%, and limiting the deduction of mortgage debt up to $750,000. In addition, the final bill on net would increase deficits by an estimated $1.46 trillion over a decade, according to the Joint Committee on Taxation. Moving on to index performance, U.S. markets have continued to perform well to round out 2017. The Dow Industrial Average, the S&P, and the NASDAQ were all up last quarter. In 2017, the Dow advanced more than 28%, the NASDAQ, a broad-based market index, almost 30%, and the S&P 500, a common measure of U.S. large-cap stocks, gained 21.83%. Global equity markets and international developed markets both fared well in 2017, with each returning more than 20% on the year. This year's top performer, however, was emerging markets, which returned more than 7% for the quarter and an impressive 37.75% for the year. Fixed income was relatively flat again this quarter, with U.S. fixed income markets and dollar-hedged international fixed income markets up less than 1%. Although a flat close, fixed income still had a solid year, with these same regions each returning more than 3% on the year. Lastly, let's talk about asset class returns. Global factor performance continued its strong trend to close out 2017. In developed global markets, momentum has continued to provide positive performance over the last few months, finishing with a return of over 34% for the year. Rounding out global factors, quality, minimum volatility, value, and small cap stocks added positive returns as well. In 2017, momentum in the U.S., global ex-U.S., and emerging markets all experienced very healthy returns. If there were an award show for factor performance throughout the year, it's safe to say momentum would probably be taking best factor in 2017. According to the Morningstar U.S. sector indices, technology, healthcare, and materials have continued their positive performance from the third quarter and remained at the front of the pack through year-end. Lastly, consumer cyclical enjoyed a particularly strong quarter, putting it right up there with the previously mentioned sector leaders this year. Once again, this is Jason Gentile with Apella Capital. Thank you for taking the time to listen to this update for the fourth quarter of 2017. Please contact me at 860-785-2260 with questions, for additional information, or if I can further assist you with your planning and investment needs.